Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Hump Day, Wednesday, November 16th, and we got a bunch of news scheduled for today. So let's go ahead and take a look at these economic news releases. We'll start off with the Consumer Price Index, which is the consumer inflationary numbers, and this is the headline numbers. So back in September, we had a zero point 0.3. Heightened, we figured it would drop down to zero and basically had a negative 0.1%. So right now, consumer price index, the consumer inflationary numbers are looking pretty tame right now, and you'll kind of see it in the core here, which is where you wipe out food and energy. So we had a 0.1%. We figured it'd be about the same, and basically remained the same at 0.1%. So very tame numbers for the core, and that's the numbers we kind of really look at because we don't wipe out the volatility when it comes to food and energy and inflation. The next numbers is industrial production, so we'll kind of see where manufacturing is. September we had a negative 0.2%, and we figured it would improve a little bit, about 0.4%, and actually went to 0.7. So not great numbers, but it's an improvement, and that's what we like to see. Capacity utilization, this is kind of inflationary on the numbers when it comes to manufacturing. So let's see what we have here. We had pretty much, right across the board, almost the same, slight improvements from 77.3% in September all the way up to 77.8%. So a little bit better than expectations. And then home builders index. This is for October. It was at 17. We figured it would improve a little bit, and it did improve up to 20, which is again, far off from where we need to be, but they are feeling slightly better about where things are moving. The home builders are. Now, let's go ahead and take a look at the headline news. And basically, the stock markets are down right now. Oil, something else to look at. Oil is up over $100 a barrel right now, so that's gonna be something we have to watch, and hopefully, we're also hitting the holiday season, so a lot of people would be traveling. So unfortunately, obviously, we're not gonna want to obviously pay higher gas prices. And here in California, we were paying probably about $5 a gallon, so this is not good news for us. And then also, this is the biggie is bond yields are rising in Euroland. Italy is up again over 7%, and the reason why that's a concern is it's very difficult to sustain to be paying that type of money, to borrow that type of money and repay it, especially when the economy is as slow as it is and looking at going into recession. So it's hard to get that GDP up and be able to cover that percent. So basically, it's almost a guarantee for a bailout. And France is also getting some very high yields. It's the highest that they've seen since the EC was formed. So some concerns right there. Now let's go ahead and take a look, see where the bond market and where the interest rates are moving. We actually started the day up about 25 basis points higher. We were actually touching about the 10-day moving average here. We're currently down about 9 basis points for the day. We were actually down about 12 and we're above. If we could close up above this ceiling here, this would become a floor, and then this would become a support for us, as this was a provides for. As we saw, we kind of bounced above here and remained above. If we could close up above here, then again, this will become a floor, and we'll have another resistance up here, maybe push us up further. But rates are better today versus yesterday, so that's good news. So know that interest rates are a little bit better. All right, folks, we'll call it a day. And if you guys are on my website, Mike's Daily Market Report, please go ahead and subscribe, or on my YouTube channel, go ahead and subscribe. Yeah, you guys have a wonderful day, and catch you tomorrow.